Our next panel will be another fireside chat. This time, the moderator is David Rubenstein of the Carlyle Group. You should also check out his show, and he'll be interviewing Chuck Davis, the CEO of Stone Point Capital. Take it away, gentlemen.
Fine. Okay. Okay, so Chuck, you've been an investment banker and you've been a private equity investor. Which is the higher calling of mankind?
Whoa, that's a tough start.
Because they're both so important?
Well, when I was on Wall Street in New York City, the world was wondering why New Jersey had toxic waste and New York had investment bankers. And then we found out the reason was New Jersey had toxic waste because they got the first choice.
Okay.
So I moved to private equity.
And you moved to Greenwich, Connecticut.
I did. I left investment banking 2 months after I moved to Connecticut because when I came over the border, I saw this big sign in Greenwich that said speed limit 2 and 20. And I didn't know what that was, but I thought that was a nice speed to go.
So what is the reason somebody should be based in Greenwich, Connecticut now that we're in Greenwich?
Bucolic, wonderful, great school systems, beautiful homes, nice people.
You ever have to go into the city, or you?
All the time.
Okay, but you come back every night here?
Most of the time, yes.
Okay, so let's talk about your investment banking career. You were a Goldman partner before the IPO?
Yep.
Okay, so what did it feel like when you went public? Did you feel like you'd made more money than you ever thought you were going to make? And
Goldman was a great place for me. I enjoyed virtually every minute of my 20 years there.
And what was your main responsibility when you left?
Just general investment banking. You know, the great thing about investment banking is that in your early 20s, you get to sit in boardrooms and watch them make decisions on the most important things companies do, and you get a lot of time with CEOs on important issues. So from very early in your career, you get an enormous amount of exposure. So having 20 years of that in hundreds of companies and hundreds of boardrooms in different industries all over the world was just a great education.
So how did you get into Goldman to begin with? Did you grow up thinking, I want to be an investment banker when I grow up? Is that what your life goal was when you were a kid?
No. I flunked out of college twice and eventually became a physical education major. My father said I was majoring in tapes and sweatbands.
Is that a hard major to do, or?
It's very hard.
I know a lot of athletes have majored in that, but I didn't know. Okay,
there's a
investment
lot
bankers did that. Okay.
A lot of pull-ups and push-ups and
okay. So how
kinesiology.
did you pull yourself together?
Well, it's a long, complicated story. I think it would be better to have a glass of wine to talk about it.
Okay. Well, give us the 30-second version.
No, the 30-second version is that I played a lot of sports in college, and I love.
You were an athlete in what area?
I played 3 varsity sports back when you could do that. And to me, the game was wonderful. And I loved the team bus. I loved the locker room. I loved the huddle.
What were the sports?
Soccer, basketball, and tennis. And when I ran out of athletic eligibility and there weren't no pro contracts heading my way, I would look for another game to play. And I was always good at numbers. I loved to memorize baseball averages when I was a little kid. And I realized finance was all about the numbers. So that's how I kind of shifted.
You were not an MBA prospect in college? No.
No.
Okay, so you went into finance, and Goldman just said, after you got your MBA, let's hire him?
Yes.
Okay, and then when you got there, did you realize you were not ready for that job, or not?
Yeah. Yeah. Well, the first day at Columbia Business School, everyone had to stand up and say, "Hi, I'm David Rubenstein, economics, Princeton. Hi, I'm Joanne Swanson, accounting, Stanford." And I stood up and said, "Chuck Davis, physical education, University of Vermont." The entire class laughed. I mean, they thought I was kidding. So
now all those people but later all those people came to you for jobs, right?
Yeah, sure. But the man who chose to call me back to Goldman, who is a person you know pretty well, about a month or two into my career, he decided that he had made a mistake and spent the next year campaigning to have me fired. So that was a tough first year. And he wasn't wrong. I was not trained. I didn't have the background.
It took a year for him to figure out how to get rid of you, or they couldn't get rid of you?
It took him 3 weeks to figure out he wanted to get rid of me, and it took him a year to...
All right. But did you survive and you outlasted him?
No, I didn't outlast him. He and I became good friends, and we worked together for a long time.
So when you left Goldman, you then went into private equity. How did you decide to set up in financial services? Because that's not an area that private equity had really been that active in because of the regulatory issues.
Well, first of all, investment banking is a great training ground for private equity because of all the experiences you get and the deal flow. But it's very different because private equity, I mean, investment banking is a factory. It's all about volume. There's a quality control mechanism, but the person who does the most deals wins. And the most important word is yes. How do I do this for the client? Private equity, the most important word is no. The hardest word is yes. So it's a real mind shift in terms of the way you look at things. The glass has to be half empty, not half full. But I loved investment banking, and I loved working with talented people. And I thought being a principal would be more fun than being an agent.
So Stone Point is now in its what year?
20-something.
20-some years,
Yep.
and you're on your 8th fund or
Yes.
something? Okay, so you are the biggest of the private equity firms that do nothing but financial services. So how did you happen to become the biggest, and what did you do that everybody else wasn't able to do so well?
Well, we're focused very much on dislocations, and we're big supply and demand folks. So when the wind blows and there's a big hurricane loss, we can set up a new insurance company. When the credit crisis hits the banking system, we hadn't done a bank deal in 8 years before the crisis. We did 39 bank deals, more than anyone in the United States, after having done none for 8 years, because we knew the owner-operators, we knew the regulators, we knew the regulations, and we felt like there was a big dislocation. So we like dislocations, supply and demand imbalances. We're not restructuring people. We're not turnaround people. We're not cost-cutting. We like to grow businesses. We've done 47 startups. We've created thousands and thousands of jobs. Also,
what's your best deal?
Well, the best deal is the most recent deal. 2 weeks ago, we just sold an insurance company we started from scratch in White Plains for $3.3 billion to Tokyo Fire and Marine. It's a company we set up with a management team and $100 million of capital 14 years ago. So you always like your latest deal.
So how much you put in? How much money? 100 million?
Over time, yeah, 500 million.
500 million,
Yep.
and that became worth
3.3 billion.
All right. So your investors are happy.
They should be.
Okay.
You know these investors. Many of them are sitting here.
So today, would you advise anybody to get into the financial services private equity business to compete with you?
No.
No, you're too difficult. You would say it's not a good idea.
Why
right?
would you want to do that?
Right. Okay. And so many people who have been very successful at Goldman in the financial service area have gone on to serve as Secretary of the Treasury or in government. So are you thinking of going to government anytime soon?
No.
And the reason is?
I'm very happy doing what I'm doing.
Okay. So in addition to financial services, you are involved in philanthropy. And you might describe something that we talked about earlier, one of the thing relating to a member of your family. Now, as we talked about, and as I think everybody here knows, the toughest thing in life, without doubt, no doubt about it, is having to deal with the death of a child, and that's what you had to deal with. So you might describe what happened and why you're so involved in the philanthropy relating to this very unique disease.
Well, there's a lot of people that are involved in philanthropy, and people have causes that they feel strongly about, and obviously Paul and Ray got into that at great length. Unfortunately, the cause that I'm most interested in is trying to cure the cancer that my son died from. And when my son was diagnosed 10 years ago, 12 years ago, he was told, and we were told, that he had a stage 4 terminal cancer and that he would probably not live more than a month or two. He set up a foundation, and he said to his mom and I, if we can't cure this for me, I want you to cure it for everybody else. And we'll never forget him saying that. He spent 19 months fighting the disease, every chemo and radiation and operation you could have, always with the most amazing spirit, and he built this foundation. So when he died, we took it and tried to make progress, and we now have a tremendous amount of progress Actually, tomorrow is our research summit. We have 60 people coming from all over the world that are doing research on the grants that our foundation gives to try to cure this very rare
What is the type of
disease.
cancer? Describe it, and how does somebody know you have it when you have it?
Well, unfortunately, you don't know you have it until it's too late. It's very rare. It's called fibrolamellar carcinoma. It only happens to young people, more girls than boys. 200 cases a year. Starts in the liver, and they know that there's no cure. And our son had never spent a night in the hospital in his life since he was born, and all of a sudden he had a pain in his leg, which turned out to be a clot because cancer cells cause clotting, and went to the doctor, and
Right.
that was that. So it's we've made a lot of progress.
What's the name of the foundation?
It's FCF, Fibrolamellar Cancer Foundation, FCF.com. We're
Okay.
always open for money raising. But one of the grants that we gave, we have now discovered the gene, or the scientists did, the gene that mutates and causes this cancer, which we're told is an incredibly amazing discovery. And now we're trying to use immunotherapy and all kinds of other research grants to take it further. And hopefully this rare cancer has correlations with other cancer. But unfortunately, cancer is a pretty tricky thing. It's not something that seems to be able to be solved quickly. So anyway, we're on it, and
All right.
our
This
son's
is your
still with
principal
us.
philanthropic endeavor.
It's the one that we have certainly the most emotion involved in.
So when you are looking at deals today, some people would say prices are very high. So when somebody comes to you and says, well, it's 14 times EBITDA, but really it's really 10, or it's 14 times EBITDA, but it's in 2028, it will be 10 times EBITDA, something like that. Would you roll your eyes at these prices you have to pay, and you just, hope for the best? Or how do you get comfortable with these prices?
Well, we're doing 10 things at Stone Point Capital. I'll tell you 2 or 3 of them. Anybody who wants to hear all 10, happy to have a cup of coffee afterwards. But the first thing we're doing is just losing an enormous amount of deals. Our funnel has never been broader. We have never seen more deals. We've never seen higher quality deals. We've never wanted to do deals more than the deals we're seeing, and we're just losing. And it's very frustrating because the owner-operators usually want us because we spend more time in the space and have more ability to potentially be helpful, but we just can't get there. And we're losing by 20, 30, 40%. And when you think that half of that is debt, sometimes we're losing by 40, 60, 80%. This could last for a long time, and it's already lasted for a number of years, but it's really gotten, in the last 12 to 18 months, it's really gotten to the point where it's very troubling. So number one, we're losing a lot of deals. Number two, we're investing in counter-cyclical businesses that do fine now, but that'll do better in a bad environment. We own the nation's leading bankruptcy software company for lawyers when they administer bankruptcies. So they're doing fine now. If bankruptcies accelerate, that company will do really well. We own the nation's leading special servicer of commercial mortgages, Rialto. They have $110 billion worth of special servicing. When a loan gets in trouble and gets pulled out of the CMBS that it's priced in, then the special servicer charges a big fee to take care of it. When we started that company and we invested in that company a little over a year ago, they had 400 million of their 110 billion in special servicing. It's now 2.4 billion. They're doing really well now, but when things get bad, they'll do better. We own the nation's leading consumer debt consolidation firm that helps people get out of debt. They're making a lot of money right now, helping individuals get out of debt. If the delinquency rates go up and back to normal or higher, this company is very well positioned. So that's the kind of thing we're doing while we wait for rational behavior to return.
Well, let's suppose I like what I hear from you, and I say I want to put money with you when you have a fund available. I don't know when you have next fund available.
Are you an accredited investor?
I have to check with my children on how much they've spent recently, but let's say I like what you're doing. What kind of rate of return am I likely to get when I put my money with you? Am I going to get a 20% net, 15% net, 13, 12, 10? What do you think I should expect?
I would hope higher than Carlyle, but you never know. No, we model returns in the high teens, low 20s.
Net
base
internal
case.
rates of return in the mid-teens?
Yeah.
Okay.
But our assumptions are, for the first time in 20 years, the exit multiple is lower than the entry multiple in our models,
Right.
which makes the model very tough to work. And we're relying more on leverage than ever before, and we're relying more on tuck-under acquisitions to help the company grow and succeed. So our return expectations haven't changed very much, but I'd say the risk adjustments that we
Okay.
make probably make it less than it was 10 years ago.
Based on all the companies you own now on behalf of investors, do you see the prospect of a recession in 2020? Do you see any indicators from those companies that maybe we're heading to recession, or you don't see that?
Well, I listened to Ray and Paul. By the way, one of the reasons I'm smiling is I took a double dose of Prozac after they spoke. So
Okay?
I didn't have the 10 shots of vodka that Paul recommended. We are, the consumer's 2/3 of the economy. The house is the key to the consumer. Home prices and mortgages were what really did us in last time. We don't see strains there, but there's certainly a lot of long-term credit growth in public and private sector, as Ray said. So I would say we probably won't have a recession in 2020. But one thing I forget, and a lot of people forget, is recessions start at peak moments, when the stock market's at all-time highs and when employment is at peak levels. Recessions don't start when things are bad. So we're certainly in an environment where it could go the wrong way pretty easily.
So somebody listening to this will say, this guy's got a terrific track record. He's done a great job at Goldman. Everything's worked. Tell me some bad deal that you did. What's the worst deal you did? There must be some deal, maybe one deal, that tiny amount of money that didn't work out. And maybe you can remember that.
I really can't.
You can't think of one. There wasn't one deal that didn't work out.
Oh, yeah. No, we've done 150 deals, and I think we've lost money 3 or 4 or 5 times. None in the last several years.
What was the mistake? Well, the mistake that was made was what?
We believe in backing people and backing owner-operators. We disagree with Warren Buffett that when a bad business meets a good manager, the business wins. We think good people figure out how to make things work. And we think people that aren't top drawer can take a great business and not do well with it. So the mistakes we've made is we backed some people that just weren't as good as we hoped and expected. Our fault, not theirs. We're the ones that decided.
Right. So there's been some criticism of private equity by some people running for president of the United States. So if you had a chance to meet with that one person and you were to say, private equity actually does a good thing, what would you actually say, and do you think you'd make any progress with that one person?
First of all, I would hopefully decline the opportunity to meet. But listen, you know more about private equity than virtually anybody. Our strategy is building companies, backing people, doing startups, creating jobs. We don't cut costs. We don't fire people. We don't restructure. We don't close facilities. We back people that we think are really good at something, and there's a dislocation or supply and demand imbalance or a need for their product at this moment in time. And when we're wrong about that, we go away quietly. But we are not, I just think we've created so many jobs and so much good fortune that I'm not defensive about it.
Why do you think that is, that the image of the private equity industry is not as great as some people in the industry think it should be? Why do people not run around saying, boy, thank you for being in the private equity industry?
Well, if you watch The Big Short, or you watch Billions, or you watch the new morning show, which, by the way, is really interesting, every single thing in those 3 venues has actually happened. It's just not the norm. So someone sees The Big Short or watches Billions or the morning show, and they think, wow, what a train wreck. But the fact of the matter is, the everyday business of private equity is a good business done by credible, hardworking, solid, high-integrity people. But clearly the wealth dislocation in this country, which I certainly agree with Paul and Ray on, has gotten very imbalanced, and wealth creation is no longer something that's viewed positively. It's more vilified than complimented. And so private equity people have made a lot of money, and it's a tough business to be in at certain cocktail parties that you go to.
So President Bush 43, when he spoke at Yale once, he said to the graduating class, to all of you A students, congratulations. All you B students, pretty good. To all you C students, you could be President of the United States. Now, have you been invited back to the University of Vermont ever, and to speak to people there and to say, for all of you athletes, you too could wind up a very good master of the universe in private equity?
I had a very bad first experience when they invited me back. They asked me to go on the board, and the University of Vermont is all about diversity and inclusion, and it's a wonderful place. And I got up on a podium in front of a very eclectic group of professors, students, and people from the community, and I said, this is really an important moment for the university because they've been talking about diversity and inclusion all these years, and here I am, the first person since 1791 that's ever been asked to join the board that represents 25% of the alumni population, the bottom quartile of the class. Right. Well, they didn't like hearing that, so it got a little better from there.
But you're on the board, or you were on the board?
I was on the board, yeah.
Okay.
I'm a big Groovy UV fan.
So for people who have children here who are athletes, should they be pushing them out of athletics into academics, or you'd say staying in athletics can make them become a private equity titan?
Follow your passion. If you really like something, you'll probably be good at it. If you're doing something because your parents want you to, or you think it's prestigious or lucrative and you don't like it, you're not going to be good at it. So follow your passion.
Suppose President Trump were to call you today and said, look, I read about you, and I've seen the interview you gave earlier today, and actually you know a lot about finance. Can you come down and give me some advice about how I can get this economy growing at 3 or 4% a year? What would you say to him?
I just would rather not have that conversation.
Okay. So you don't want to talk to President Trump? You don't want to talk to Elizabeth Warren? Who do you would like to talk to?
You.
Right. Well, that's a pretty lower, much lower than those people. But okay. So a final question I'd like to ask you. So as you look back on your pretty impressive career at Goldman and private equity, Stone Point, and so forth, what are you most proud of having achieved, and what would you say to young people are the most important attributes one should have in order to be successful in the financial services world? So first, what are you most proud of, and what are the attributes?
Well, one of the things I'm most proud of is I've been the chairman of the Hershey Company, and we have a female CEO who is spectacular. I'm the senior director at Progressive, and we have a CEO who's a female who just was named Fortune Magazine Business Executive of the Year, first woman ever. We also recruited a woman to be the independent chair, so we're the only Fortune 1000 company with a female chair and a female CEO. 4 of our portfolio companies at Stone Point are run by women. We'd like it to be more. I think diversity and inclusion has been something that we focused on a lot. I'm very proud of that. I'm very proud of the team at Stone Point and the mission and the quality of what we've done. Okay. And the environment that we work in. It's very collegial and cooperative, and a lot like
so what are the attributes? What are the attributes for success as you observe them? If somebody said, what does it take? Should I be a good writer, a good talker, brilliant analyst? What are the most important things for success?
All the above. I think that people have to do what they really like and what they're good at. And if they like business and they like people and they like numbers and they like taking risk and putting themselves out there, private equity is a great business. Investment banking is a great business.
Deep down, is it really true that chocolate is healthy for you? Do you think that's true?
Absolutely.
Really?
Absolutely.
And the more you eat, the healthier you get?
Particularly dark chocolate.
Really?
Yeah.
What about milk chocolate? I like that better.
Milk chocolate's good too. No, all chocolate's good. But you should know that Hershey has gone from the dominant chocolate company, which we're very proud of, to a global snacking powerhouse. We bought Pirate's Booty. We bought Skinny Pop. We are moving very much into a
Are
snacking
all those
company.
things healthy for you, or
They are in what's called the better for you category.
better for you? Better for you.
There's the indulgent category.
Better
We
for
all
your,
need a moment to indulge. I certainly needed
better
some
for your-
candy after listening
better
to Paul
for
and
your
Ray.
better for your cardiologist, or better for you?
Better for you. So there's indulgence, there's better for you, and then there's good for you. Unfortunately, very few people buy good for you, so
Oh.
we have to keep our
But you eat-
shareholders happy.
But you eat a couple Hershey's Kisses every day, I assume,
Absolutely.
and that's good for you, right?
Well,
You look
so
in good
far.
shape. Okay.
So far, David.
All right. Well, thank you very much for a
Hey,
great conversation.
thank you all.
The 2019 Greenwich Economic Forum is brought to you by Bridgewater Associates. Meaningful work, meaningful relationships. Churchill Asset Management, Nuveen, a leading provider of senior and unitranche debt to middle market companies. Ropes and Gray, bright past, brilliant future. Aurora Capital, inspiring partnerships. And Gramercy Funds Management. We are emerging markets. Special considerations to Bank of America. Life's better when we're connected. Noah Private Wealth Management, a leading wealth and asset management service provider in China. Guotai Jinan Futures, a leading brokerage firm for commodity futures and financial futures in China. China Industrial Securities, a comprehensive financial group providing full spectrum financial services in Hong Kong. And Titan Advisors, built like a hedge fund. Special thanks to the Financial Times and Greenwich Business Institute for hosting us. And thank you to all the sponsors who helped make this event possible. We'll be right back after these messages. Don't go away.